Good morning, everyone. It's 6:30 in the morning and I have a long day ahead of me. But before I go, I want to make a video about Bitcoin. Oh, the sun. Let me just go on the side here real quick. Okay, there's a few reasons why Bitcoin is not what it is, what you think it is. And no one brings up those reasons. But that's okay. That's why I'm here. I will give you 3 reasons and you will see in the third reason why it is not a hedge against inflation. All right, reason number 1, or myth number 1, Bitcoin is scarce. Yes, there's an arbitrary cap on 21 million Bitcoin, I believe, which is only there because that's what the creators coded there. Nothing stops them to create more Bitcoin by changing the code or by just diluting the currency smaller and smaller to smaller units. But even if these two things don't change, let's say we leave the cap and it is scarce, it is still not scarce, because even though Bitcoin might be scarce, altcoins and other coins are not. There's thousands of others altcoins out there and you can create one for fairly cheap. You need about $3,000 to create your own coin. You can even create tokens on platforms that already exist, like Etherium. That's not very scarce if you can just have an alternative to your Bitcoin. Reason number 2, energy prices. Bitcoin and cryptocurrencies in general are very sensitive to energy prices. So the higher energy prices rise, and the less profitable your crypto will be. In this case, Bitcoin. So to mine Bitcoin, it's favorable for you if energy prices are low. But as energy prices keep rising, for example, right now because of inflation, there's nothing the miners can do to offset the additional costs. They can't just raise the price of Bitcoin. So it gets less profitable to mine Bitcoin. So that doesn't sound like a good hedge against inflation to me. And reason number 3, it's not a hedge against inflation because it goes down with inflation. We've actually data that shows that this year, in February 2021, when the fears of inflation were ramped up, Bitcoin fell more than the overall market. So the blockchain and Bitcoin, they're digital ledgers, and that's why they're simply tech. So if you want to put them into a sector, they are trading alongside the tech sector, which also suffers from inflation or fears of inflation, which we saw in February. Digital currencies, tech, they are a risk on assets, not a hedge against inflation. Hedges against inflation are gold, silver, real estate, commodities. Those are hedges against inflation, not tech and not Bitcoin. And I explained in my previous video, or one of my previous videos, why tech goes down with inflation. So here are your 3 reasons why Bitcoin is not a hedge against inflation, and why it is worse than you think, and not why it's not what it is, what you think it is. I hope that helps in your decisions in the future. And if you're interested, why don't you subscribe and check out my blog, check out my products that I link in the comment section below, and for some more content, and of course to support me if you like my content. And and leave a like, and thank you so much for watching. Take care.